more screen time, more setups, more entries, more action. But here's the paradox. The smartest, most profitable traders do the opposite. They trade less and make more. It sounds counterintuitive, even lazy. But it's one of the deepest psychological edges in the game. Let's break it down. 1. The illusion of productivity. Trading more feels productive. You're clicking buttons, watching charts, reacting. But productivity in trading doesn't equal profitability. Smart traders know this. Your job is not to trade. Your job is to wait. To wait for asymmetric opportunities where risk is low and probability is high. Every time you trade out of boredom, FOMO, or impatience, you dilute your edge. You're adding noise to your system. You're taking ordinary bets instead of extraordinary ones. 2. Emotional capital is finite. Every decision costs mental energy. Every trade drains emotional capital, not just financial capital. You might not see it in your P&L, but it shows up in the small ways. You hesitate on the next trade. You revenge trade after a loss you chase because you feel behind. Smart traders protect emotional capital like gold. They trade only when their system aligns and their mind is calm. By trading less, they preserve decision-making clarity. By trading less, they reset faster after mistakes. 3. Probability doesn't care about frequency. Here's a harsh truth most traders ignore. You don't get paid for effort. You get paid for accuracy. The market doesn't care how many trades you take. It only pays when your edge plays out, and edge is rare. Smart traders know this, so they build systems that filter for only high-conviction setups, limit randomness, avoid statistical noise. By reducing trade frequency, they increase signal quality. They don't just win more, they lose less. And that's a massive compounding effect. 4. The myth of over-optimization. New traders fall into the trap of micro-optimizing every detail. Constant tweaking, backtesting, strategy hopping. They're trying to find a way to trade every market condition. Smart traders? They optimize for sustainability. They focus on 1 or 2 core setups, deeply understood and repeatable. They aren't trying to win every battle. They're waiting for the war they know how to win. That simplicity lets them step back. It reduces screen time, reduces stress, and actually increases consistency. 5. Time off is a strategy. Think about elite athletes. They don't train 24/7. They recover. They rest. Because recovery is performance. Smart traders build in non-trading days. They step back after emotional wins or losses. They give their minds time to reset, recalibrate, and see clearly again. In fact, some of their best trades come after periods of silence. Because when you're not in the market, you're not distorting your view of it. 6. Less trading equals better data. Frequent trading skews your performance metrics. You can't isolate what's working if you're trading 5 different setups across 3 markets. Smart traders isolate variables. They know the fewer trades they take, the more signal they can extract from each outcome. They measure, was this setup valid? Did I follow my plan? Was the loss due to market conditions or my psychology? Trading less gives them room to answer those questions. It turns every trade into a lesson, not just a reaction. 7. Stillness is a superpower. Smart traders develop what looks like a boring trading style. They can sit for days without clicking. They can go weeks without changing a single parameter. Because they understand the deeper truth. Discipline is not doing more. Discipline is waiting. And in that stillness, they get stronger. They sharpen their instincts. They filter out noise. They stay emotionally neutral. So when the right trade comes, they're not burned out, over trading, or second guessing. They're clear, focused, ready. 8. Profit loves patience. The market doesn't reward hyperactivity. It rewards precision. The best trades often come from waiting longer than others are willing to wait. Holding when others panic. Acting only when everything aligns, not when you feel like doing something. That's why smart traders look inactive on the surface. But underneath, they're watching, recording, thinking in probabilities. And when they strike, it's clean, calculated, and powerful. Final thought: if your trading feels like a constant hustle, you're doing too much. Smart traders make more by doing less, because they've built systems that match their temperament, preserve their energy, and focus only on high-quality opportunities. Their secret isn't more information. It's more restraint. They don't chase the market. They wait for it to come to them. And that's why they win.